Are you looking to take your personal finances to the next level? Well, you're in the right place. Welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not, with your host, Joseph Sangle.
Well, welcome to the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. My name is Joseph Sangle. I'm one of the hosts of this show, fired up to help you in your money journey to live a fully funded life. Today, we're going to talk about what?
Today, we are talking about how bad credit impacts your wallet. So, episode 126.
Yes, and that is the voice of Megan Hibbard, the co-host of this outstanding, phenomenally, wildly popular podcast. And it is the last day of November. Can you believe it?
It's wild.
The final day.
Where did it go?
News alert. 31 days left in the year, 25 days left to Christmas. Please do not celebrate the birth of Jesus by going into debt. In other words, have a plan for your money. That is not the topic of today's podcast. We're going to talk about how bad credit impacts your wallet. So tell everybody kind of the question for this episode.
Yes. So our featured question is, I've heard that bad credit affects more than my ability to buy a car or house. Can you explain more about this?
Well, yes, we can. As we dive into this, I do want to just say, many of us are recovering from lots of turkey. Hope everybody had lots of pumpkin pie, and my favorite, pecan pie, which is the correct way to pronounce it. It is not pecan, but if you want to call it pecan and serve it to me, I'll still have it. I'll still eat it. And the best way, I'm just going to tell you, I know it's a little late, but if you happen to get some pecan pie at Christmas, the best way to eat pecan pie is to put it in the microwave for about 15 seconds with a little bit of butter on top. Woo! I want some more right now. But I got to go run before that. I've got to earn it.
I had I had pumpkin pie for like the first time last night.
What?
I know. Where have I been?
For the first time?
The first time.
In your life?
I think so.
You've had pumpkin spice stuff.
Oh, daily.
And you've never had pumpkin pie.
I don't know how this has happened.
That's not true.
It can't be true.
You got to be lying. I cannot believe that. That's amazing. Megan is maybe is a little bit on the edge of a lie, which I can't believe personally. So, y'all, we need to get Megan like a pumpkin pie daily to catch up for whatever she lost out on her first 20 some years of life. Okay, so tell about our featured resource for I Was Broke, Now I'm Not, this coming month.
Yes, our featured resource is your latest book, 2020 Money, Gaining Clarity for Your Financial Future. So start this holiday season out by having 2020 vision for your life and money. Many people feel stuck in their financial journeys, and because of this, they find it difficult to even allow themselves to dream. So in 2020 Money, Joe shares practical steps you can take to discover and fund your God-given purpose. Your dreams can become a reality. With the clarity gained, you'll be able to charge forward and live a fully funded life. So visit iwbnin.com/2020 to learn more and get a special offer this month.
Yes.
Yep.
And listen, 2020 Money, it's got 22 questions that'll help you be able to identify exactly what your God-given plans, hopes, and dreams, what we call your PhDs. So get a doctorate in your plans, hopes, and dreams, your PhD in your PhDs. It'd be awesome. Before we dive into the question for this podcast, we're going to go to that favorite segment of the podcast. My favorite, you know what that is. Let's go.
Now it's time to get caught up with our current money events.
This portion of the podcast is sponsored by the 0% balance transfer credit card page at I Was Broke, Now I'm Not. If you're paying high interest on a credit card balance that you cannot pay off each month, this is a great way to eliminate all of the interest and speed up your way to debt freedom. Check it out at iwbnin.com. Click on Next Steps, then 0% credit cards.
Yes. And so for today's current money events section, I'm going to talk about a topic I talk about maybe 3 or 4 times a year, and that is mortgage interest rates. Mortgage interest rates are really important. We like to pull stuff up on bankrate.com, and you can see, if you're watching on YouTube, how you can pull up bankrate.com, and you can type in refinance, or if you're purchasing, you can type in your zip code, property value, the loan amount. I just put in some random numbers here, and it will show you what the interest rates are and the different banks that are offering them. And if you scroll down, it will kind of show the overall collective numbers for people who have decent and excellent credit. So I thought I would share these updates. The 30-year interest rate is 2.5% to 3%, and the 15 years 2 to 2.5%. Now, as we've shared on recent podcast episodes, Megan has recently purchased a home, and you received an excellent interest rate. What interest rate? Do you remember what it was exactly?
Oh, gosh.
Is it
It
30-year note?
Yeah, 30-year note.
Under 3% or just of 3%?
It's
Do you
just
remember?
at 3.
Just
yeah.
at 3.
Which is hard because, like, I feel like right after we did it, our real estate agent was like, somebody just got in the 2s. And I was like, what?
What? Yeah, and if you're 15-year, you can get, we see them listed for 2%, which is just unbelievable. And so as I go through this current money event section, I want you to know that refinancing is at a torrid pace. Torrid. Torrid is a unique word. I don't know if I've used it too often, but it is torrid. It means like ripping. Rocket Companies announces their third quarter results was the title. And you've seen the commercials. If you watch any sports events or anything, you see these commercials for Rocket Company. You see it on your Facebook feed, your social media feed, you know, where you can click it and just apply online. It's amazing. And they announced an unbelievable third quarter results. So think about this. In a pandemic, they closed their origination, which is new loans volume, up 122% year over year to a record of $89 billion. $89 billion of loans originated, and they increased their GAAP net income, which is generally accepted accounting practices, net income 506% year over year to $3 billion. That's amazing. So that's just people in their home refinancing their home. Of course, purchasing new homes is also at a torrid pace. Now, I will tell you, at the outset of the pandemic, I had a honey-do list about 7 miles long because I've traveled and spoke and all this stuff. And immediately I started doing stuff. And one of the projects was to put in a loft in my barn so I can take stuff off the floor, stack stuff up there so I can place new stuff on the floor. That's what we do. I like flat areas. They hold stuff. And so I bought a sheet of OSB plywood. A sheet of OSB plywood. That's really exciting, right? Is that exciting? Very exciting.
Riveting.
It was like $7.50. Do you know what a sheet of that same stuff, 7/16 OSB is right now?
$25.
$25.
Was it really?
That is $25.
I believe
3X.
it.
And so to say new home building is at a torrid pace is like an understatement, and that's hard to believe. So here's the headline. U.S. single-family home building accelerates in September. U.S. single-family home building surged in September, so they're usually about 3 months behind, cementing the housing market status as the star of the economic recovery. Housing has been robust thanks to record low interest rates and a migration to the suburbs and low-density areas as Americans seek more room for home offices and schooling. As I've said, man, I'm so glad I had 11 acres to run around on during the pandemic and a farm to go run on too. Because, it's tough. It's been tough for people in these very small apartments in big cities. They want space. So housing starts increased 1.9% to a seasonally adjusted annual rate of 1.415 million units last month, the Commerce Department said. Is that crazy?
That is crazy.
So the single angle is this. If you haven't refinanced, do the math. I would tell you this. If you had a 30-year, don't go back to a 30-year. Try to cut an additional 5 years off your note. If, like Megan, you went back to a 30-year, you can run the math to say, how can I cut off an additional 5 years and make that payment instead? There is no penalty for prepayment on most mortgages, and you can use our early payoff calculator and the mortgage payment calculator in combination to help you make the best decision for you and your household. Of course, as always, we'll include links to those tools in the show notes. And that's it for today's current money events section.
All right, so our success story today comes from Matt, and Matt says, I can't begin to thank you enough. About 2.5 years ago, you taught some classes at New Spring Church, where my wife and two kids still currently attend. We went to the first class thinking we had a good idea of how to get out of debt. We had almost $65,000 in debt between credit cards, which was $26,000 alone. His truck at the time was about $28,000, and the rest was student loans. Little did we know we were in a very dark place financially, and at that time, we were wanting to expand our family. Like I said, we can't thank you enough as we walked out that first night with some amazing tips and tools, and most of all, hope. I'm proud to say that we have just a little over $3,000 left to pay off, and that will be gone by the year's end. Thank you, thank you, thank you.
That's awesome.
Crazy.
I love success stories like this. Thank you, Matt, for number one, taking the time to write. If you think about how little people write, and let alone using full words, that's a lot to write, especially when you're sharing the details of your personal financial situation. And one thing that I know that's really clear is he said, we had no idea, how bad it was. It gets revealed. And then he says, little did we know we were in a very dark place financially. Like he just didn't know it. But all of a sudden, light was shed on it. And we always say when we're teaching, when we're on this podcast, our goal is to plant seeds, things for you to think about on a Monday that you could noodle on through the week and finally make a decision that can help you take a step forward. We would love to all take leaps and bounds forward, and sometimes you will. Most times it's little steps, one step after another. And so, Matt, 2.5 years ago, think about this, you had $65,000 in credit cards and truck debt and student loans. Today, as you wrote in this note, you have $3,000 left. That's less than 5% of your debt left. You're 95% of the way there. And by the end of the year, in a pandemic, you're going to be 100% debt free. So I see you say thank you, thank you, thank you. I want to turn it around and say thank you, thank you, thank you for turning in and sharing this story to us, because this is how this podcast is powered. It's why we do what we do. Megan, what type of thing do you take from this success story that you would want to share?
Yeah, I think it's wild. I think a lot of people look at their debt and think, I'll never be debt free, or the amount is too much. It's insurmountable. I can't pay off that. But he had $65,000, and in 2.5 years, like you said, 95% of it's paid off. And that's huge. And I'm sure their family would say they've made some sacrifices, but I can guarantee you in this moment, they're saying those sacrifices were well worth it. And so I think if you're in that boat and you're saying, I have all this student loan debt, I have all this car debt, credit card debt, it just mounds up. Well, write it all down. We have a tool that you can do that in, and then start making steps towards your debt freedom. And you can do it. We've read story after story each week of people that have paid off thousands and thousands of dollars. And so why not you? Why couldn't it be you? And so it just takes one step to get started. So we really encourage you today to take that step. We have lots of episodes on how to get rid of your debt, how to pay it off quickly, different 8 ways to eliminate your debt, yada, yada. We have all these episodes. So I'll include a bunch of them in the show notes if that's where you are, but you can do it. So why not you start today?
Awesome.
Yeah.
And so now we come to the teaching moment of the podcast, trying to give you practical wisdom for your money journey. Remind everybody what the question is for this week.
Yes. So this week, our question is, I've heard that bad credit affects more than my ability to buy a car or house. Can you explain more about this? Yes.
Well, yes, we can, of course. That's why we have the question on here today. And I would say you have heard correctly. Bad credit does indeed affect more than your ability to buy a car or a house. And so here's what I would encourage you to know about how bad credit. First off, let's just kind of talk about what bad credit is. Bad credit means that you have a credit score below 700, definitely below 650. That becomes mild and it becomes really bad when it's under 600. Many people have it under 500 scores. Bad credit is created not because you have a low amount of money in your bank account. As a matter of fact, the amount of money in your bank account has nothing to do with your credit score. A credit score is a measure of your ability to handle credit or debt. So it's affected by, it's drawn down if you don't pay your payments on time. That's a big one. If you're using too much of your available credit limit, if you have too much debt relative to your income, if you have any outstanding judgments against you, like you have bad debts that you're just not paying, those things all affect you. So a lot of times that's medical debt that's not been paid. It's a cell phone that you abandoned a plan with one provider and went to another, and you didn't clean up the bill before you left. All those things affect not only your ability to borrow money to purchase a car or a house, but it affects a lot of other things. And so we're going to share with you several ways that affect you. Many of you have good credit. You're listening to the podcast. You have no idea how much your good credit helps you. Today, we're going to teach you how it hurts you. And if you feel like you've been paying a lot extra on certain things, we're going to help inform why. If you have bad credit, it's probably the reason why you're paying so much more than others. So Megan, share with them the first way that people are affected with bad credit.
Yeah, the first one is insurance premium prices. So many auto insurance companies use credit-based auto insurance scores to help them decide whether to take you on as a policyholder, as well as the premium you'll pay. So if they do take you on. So while it's only one of many factors that go into determining your rate, having good credit can help you save money.
And that's a big deal, because if you think about this, why is the premium higher? Do you know, Megan, why the premium is higher for people with bad credit?
They don't trust you enough to pay it.
It's not that they don't trust you just because they don't trust you. Yeah. It's because they have facts in evidence.
You've proven that
you have bad credit, you are much more likely to have an auto accident.
Right.
Isn't that crazy?
That is crazy.
So it's actuarial science, math, proven statistics that say people with poor credit have more auto accidents. Is that crazy? That's provable. Therefore, they charge more. Many people with poor credit pay double the amount of someone with the same situation, same type of car, same area, but the only thing different is their credit because it's proven. So if you want to have better insurance rates, work on that credit score. You know, credit-based insurance scores, they're different from the credit scores that most people are familiar with, like FICO and the Vantage score, used by creditors. Because while credit scores try to predict the likelihood that a consumer will be 90 days late on a payment in the next 24 months, credit-based insurance scores try to predict the likelihood that a consumer will file insurance claims that will cost the company more money than it collects in premiums. Isn't that crazy?
That is crazy.
And so auto insurance companies can and often do consider your credit history or use a credit-based insurance score before offering you coverage. It's, of course, only one piece of the puzzle. However, as insurance companies are generally prohibited from making a decision solely based on your credit. In fact, some states won't allow insurance companies to discriminate or change rates based on their credit history. List some of those states for people.
Yeah, so some of those states include California, Hawaii, Massachusetts, and Michigan. So strictly limits or entirely prohibit insurance companies from using the credit information to determine your auto rates. Those are a couple of those states that do that.
Yeah. And so, I would probably say that this will become a trend. But right now, hey, if you don't live in one of those states, California, Hawaii, Massachusetts, or Michigan, we live in South Carolina, Georgia nearby, guess what? They can charge you much more, and they do. Okay? So that's one way that having a bad credit can affect your ability, it affects you more than just your ability to buy a car or house. So what's a second way that it can affect you?
Yeah, the next way is a new job or your current one. So
yes.
The next time you interview for a job, your potential employer may not only ask you for a list of references, but also permission to run a credit check.
Yeah. And so you think about this. If you have a job that involves management or is involved in management of finances, many companies want to know that the person that they're preparing to hire, that they are trustworthy when managing financial decisions. And I just cannot tell you how many times I've done one-on-one coaching for people who their job is accounting. Like they are accountants for corporate accountants. They do accounting for individuals, for taxes, for their businesses. They cannot handle their own personal finances. And they literally are ashamed. They're like, I don't know what's wrong with me. I seem to be able to manage all of the things for my clients, for my job. I can do it unbelievably. But then when it comes to my personal finances, I can't do it for some reason. And I would just encourage you to think about that. Bad credit. If you're looking to climb the corporate ladder, if you're in the world of finance, this can cost your ability to get that new job or get that promotion. And it can actually cost people their current job because many companies have started looking at people's credit as they are employees, and it can cost them their job. How crazy is that? And by the way, for each of these things we're sharing, we did the research for you, and we found some really good articles, and we're going to provide the links to each of these so that you can read them if you want to know more about it. Okay? So the next one that I wanted to share with you that can affect you is renting an apartment. And so, Megan, kind of talk about that.
Yeah, so as with banks, landlords like to size up your ability to pay them on time before handing you over the keys to a property.
That just seems outrageous.
It does, but then it also is kind of like, I understand. I mean, they're trying to cover their basis and make sure like...
I'm joking.
They're renting you a space. They want to make sure that you're going to pay for it. So, but it is crazy that they can do that.
No, well, I am the landlord. And so I do run credit checks.
Yeah.
I mean, I just do that. And the reason being is I'm letting you move into a piece of property that I own. And believe it or not, it's not free. There are property taxes, there's maintenance, capital expenditures. And I want to make sure that you can pay. And not only that you can pay, but that you can pay on time. And now every landlord can set their own rules. They can set their own rules. And, what we found is that people who have really, really bad credit or are not really intending on paying, when you ask them to fill out a credit report or a credit check form, they tend to not show up and fill out the form. And so it's a way to help if you are a landlord. But one of the things that I think is important is, credit history is an indicator to landlords how likely you are to pay the rent. And many people are very frustrated because they have bad credit and they're like, hey, that was a phase of my life and that phase is over. It might have been a phase where they were laid off. Hey, that's a real situation right now, isn't it? It may be a phase where they were going through a relational turmoil, like a divorce or a split up with their boyfriend and girlfriend. They were living in the same house together, and then their names were on it. We've seen this happen. Or a married couple, and they're getting a divorce, and their credit is both shot. And now they've moved on. It's a year or two later, but their credit is still shot. And this is why it's so important. We tell people to have a budget, to make sure that you get the stuff separated if that is the case, so that you no longer have somebody who is affecting your credit and you have no control of that decision at all. And then make sure you pay your payments on time. One of the things that we would say related to all of this and how bad credit affects you more than just buying a house and getting good insurance rates is that when you're renting an apartment, maybe you're trying to buy a house, ask people to do manual underwriting or ask the landlord to consider your circumstances beyond just the credit score. Like, most people are reasonable humans. Believe it or not, I am a human. Did you know that, Megan? I don't know if the podcast listeners knew that, but I'm not an Android because I have a Mac computer. I'm not allowed to be an Android. That's a bad joke. But anyhow, I would just say this. I'm a human, and I will listen to the human story, just like most other landlords will, just like most other people. If you're doing an owner finance on a house where the person who's selling you the house functions as the bank, don't let your bad credit be the end period to your sentence. Let it be a comma. I have bad credit, comma. Here's why, comma. And then this is what I have done to change this. And these are the promises I can make you. And make truthful promises. And that can help you greatly.
Yeah, and we actually did an episode not too long ago about how to rebuild your credit. So if you're finding yourself in that situation where your credit is bad and you're not quite sure what to do and it's affecting these areas of your life, well, I'll include a link in the show note, but make sure you go back and listen to that episode because it could be super helpful in allowing you to build or rebuild your credit in that situation. So,
it's huge.
Yeah.
And so tell everybody another way that bad credit can affect you or your loved ones.
Yeah, the next one is military clearance. And this one's wild to me, but also comforting at the same time. So the Pentagon was directed to be far more aggressive, including instructions to continuously monitor the financial status of service members with security clearances.
Stop right there. So Megan just said something really huge. This is straight from an article. We've got it linked. It's from debt.org talking about veterans and military security clearance. And as I said, all these articles are posted in the show notes. But she said continuously monitor. Think about how crazy that is.
Yeah.
This is not just before you get the position. This is not once a year. It's continuous monitoring of financial status with security of service members with security clearance. Is that crazy? So that means what?
Yeah, so it also means that past due bills or an error on your credit report could jeopardize your clearance status.
Right, and this is from the National Security Adjudicative Guidelines, which matter a lot, right? Which is adjudicated by the JAG, right? We all know that stuff.
How many times can you use adjudicative in a sentence?
I've used toward and adjudicated for the first time in a podcast ever. But I will tell you, it's clear. The link between security clearances and well-managed finances is that failure to live within one's means, satisfy debts, and meet financial obligations may indicate poor self-control, lack of judgment, or unwillingness to abide by rules and regulations, all of which can raise questions about an individual's reliability, trustworthiness, and ability to protect classified or sensitive information. That's what the guidelines say. And so just barely more than a month into the new program, there were already 58 workers who had their security clearances revoked as part of the Pentagon's always-on monitoring system. And I wonder how that's going to be here with the pandemic for so many soldiers that are out there. But still, it's financial irresponsibility. That is an unwillingness to address debt trouble. That's a bigger deal than actual bad credit. Context matters. Are your problems largely out of your control, such as divorce, job loss, health emergency, or business failure? You may be in luck if you have military security clearance. If, however, on the other hand, your financial troubles are an extension of personal foibles.
What are the words
such as gambling or alcohol addiction or illegal activity, you can kiss that security clearance goodbye, says the article from debt.org. And so I guess in wrapping this up, we want you to know, yes, your credit affects more than just your ability to buy a car, buy a house. If that's not motivation enough, knowing that it will save you money on your insurance, knowing that it will help you in maintaining your security clearance or get a job or retain your current job, and in obtaining housing if you're renting an apartment, I think that ought to give everybody sufficient motivation to focus on improving their credit. What do you think?
Yeah, I mean, there's a couple things that I would walk away from with this episode. One is like there's hope. If you're in this situation, there's hope. Like I said, listen to that previous episode, work on your credit. It can really transform these areas of your life. But then there's also the other side of like, maybe you're just you're growing in knowledge of like, oh my goodness, I didn't know these things could happen. I didn't know these areas of my life were being affected by this credit score. And so that's huge motivation, like Joe said, for you to like, all right, it's time to get to work, take a step, let's keep going, like let's work towards this, figure out what your next step is and let's start moving, because it really can change your life in a whole bunch of areas. If you're wanting to buy a house or a car, but then also all these areas we talked about that surely one of them might be affecting your life right now and you might not have even known about it. So there is something that you can do about it.
And here's a crazy idea. The crazy idea, parents of teenagers, hey, if you're going to help them with college at any level, or if you're helping them get a car at any level, utilize your parental privilege and challenge your kids to at least look at the show notes. If not, listen to the entire podcast episode. Because the greatest thing you can do as a parent is teach your child sound money management principles. It's one of the greatest things you can do. And I would tell you, helping your child understand this early and often, having the conversation, that's what's going to help them really, really prosper and win with their finances. And so we encourage you to spend some time. I mean, what is this, 20, 25 minutes? And if you just take this section, maybe it's 15 minutes. Let them listen to this and let it facilitate and start and initiate a great conversation with your child. Today's verse for today is to let no debt remain outstanding except the continuing debt to love one another. For whoever loves others has fulfilled the law. And that's Romans 13:8. Really what it's saying is pay back what you owe. When you do, you know what? You'll feel good, you'll be debt free, and you'll probably have great credit. Tell everybody what we're going to talk about in the next episode.
Yes. So next episode, we're going to talk about identity protection. So a lot of people, we get this question a lot of people asking, should I pay for services? There's a lot of out there. Which one should I use? If I do, all that kind of stuff. We're going to talk about that. So what you should do when it comes to protecting your identity. So it'll be a good episode. And if you like today's episode, you could help us get this podcast to others who could benefit. So you can do this by quickly rating our podcast and leaving a review. And these ratings and review will help us get our podcast to other listeners and it'll make it better for them as well. So, and also if you implemented one of our tips, make sure you share that with us. We'd love to hear your success story. So you can share that at info@iwbnin.com.
It's time for you to win. It's Monday. Get after it and have a great week. We'll see you next Monday. Go have a fully funded life.
Thanks so much for listening to this episode of the Monday Money Tip Podcast, presented by I Was Broke, Now I'm Not. If you enjoyed today's episode, please leave a review and subscribe. And for more great content and to stay up to date, visit iwbnin.com. We'll catch you next time.